Today I'll be showing you an option strategy on a stock that you can guess the general price of by an expiration date. So for this example, I'll be showing you on Tesla. And if you enjoyed these type of option strategies, make sure to check out my channel for more and subscribe for more videos like this one. So if we come over here to Tesla, first off, we're going to set the expiration date. So come over here and we'll set it for June 10th because I'm recording this on June 1st, so June 3rd is just not very much time to let the stock settle in the right spot. So we're going to set June 10th. We're going to go look at the price history real quick. So you can just use this to get a general estimate of where you think Tesla will be. So let's say since we saw it, so let's look at the past week, and since we saw it stay pretty stagnant actually, let's just say that we think it'll remain pretty stagnant besides this little drop right here. Let's say we think it'll float up just a little bit, because if we look at the past day, it fell a little. So let's say we think it'll float up and stay somewhere around this line. So the overall price isn't going to move much, is what we think. So we'll come over here, and so this is called, later on I'll be showing you option strat, so if you'd like to pull up another tab, you can look at that. But this one is called a long call Condor, but we'll go to option strat later to finish this up. But first piece is we're going to buy a call underneath the price that we think Tesla will be at. So if I think Tesla is going to be around its share price, I think I'll trade sideways. For this example, let's buy a call right here. So we'll buy that one. And then next thing is we're going to sell a call above it. Oh, I guess Tesla just dropped. So we'll actually rearrange this so it's in the middle. So we're going to buy a call. Oh, it just rose. Okay, so we're going to buy a call right here where it just was. We're just going to let it move around on its own. And then we're going to sell a call one above it. And then you want these to be equidistant from each other because we're going to do it again. So we're going to come over here. Actually, next up, we're going to sell a call again. So let's say I want to have a gap of 2 so that Tesla has some range to sit in between. So let's come up here, let's go 1, 2, and I'm going to sell a call again. So I sold this one, and this gray one right here on the bottom is the one that we bought. And we're going to buy another one. So then we're going to go up above it. So we have buying on the outsides. So you can see the reds, those are buying. So we're going to have buying on the outsides, and the gray in between is called is the selling ones. And you want these to be equidistant from each other. So for example, since these two are side by side, since we bought this one and sold this one and they're side by side, we don't want to sell this one and then buy one with a gap between it, because you see there's a gap right here and there's no gap here. So you want them to be equidistant from each other. So make sure you have it set up like that. So those are side by side, and then these are side by side, and obviously sell is in the middle, those are the gray ones, and then buy is outside, which is the red ones. So if you come over here on this right side, it should look something like this. It should look like some pyramid without the top on it, and then there should be red lines on the outsides. So we can see here, we can get a little bit of a visualization. If you see the black dots, those are, if it's between the black dots right here, this is where your profit sits. And then you can see these green dots right here is where your profit's maxed out until you see the green on the other side, profit's maxed out again. And then you can see the red dots right here. There's a little space between the red and the black dots. You see the red dots right here, this is where your max loss occurs. Anything past this is the same max loss as if it was right at that red dot. So you see right here, our max loss is limited at minus $53 right now. It keeps moving around, so the numbers are going to change a little bit just because Tesla's moving right now. So these numbers right here are going to change a little. But yeah, you can see the max loss is limited. Sometimes you should be scared of option strategies that have a max loss of unlimited, unless you're pretty advanced, you kind of know what you're doing. But until then, I would definitely recommend you to have one where your loss is limited at a certain number. And then right here, you can see our max profit. If Tesla can sit between 730 and 745 by June 10th right here, we're in the good. If it falls, you see the max loss that was only $48. So it's definitely a 10 times return, depending on where this number is sitting. But it's obviously, it's about a 10 times return. So if we come over here, we're going to go over to option strat to visualize this a little bit better, because Robinhood doesn't show you very much with this chart. That chart is pretty bad compared to what option strat is going to show us. So come over here, click on build, and you're going to come down here to neutral, and you're going to click on long call Condor, the third one down. And you'll see something that was similar to what we were showed over here. It can look a little different at times, but this is what we're looking at here. So we're going to reset our symbol so that we put the correct one in there. So we're going to put in Tesla. Make sure you choose the correct expiration date as well. It's set by default June 17th, but we want to correct that to June 10th. Oh, I think it changed it. long call Condor. There we go. Okay, so Tesla, June 10th. So now we have 4 pieces right here, and all we do is copy this layout right here into option strat, and it's very easy. So we'll start with the 2 buy. So we did a 725 buy and a 750 buy. You can see the B, or the buying is on top. So we'll do 725 and 750, I said. So it's 725 right there, and then 750. And then we'll do the ones we sold. So we sold 730 and 745. Selling is on the bottom. 730, 745. There we go. So we got that all set up. We'll change the chart range a little bit so we can visualize this a little bit better. But yeah, it's put up about the similar numbers. Max loss is about $52. Max profit is about $448. Let's compare it. 452, 48, 450, 50. So it's constantly changing, but that's just because the share price of Tesla is moving right now. So you'll have some movement in that aspect. You can also see on Upstrat if you were to play with the implied volatility to see how that affects things. We'll just reset it to what it's at right now. So yeah, you come over here, you look at this, you can skew the chart around, and then right here on this left side, you can see all the prices, and you can also see on the certain days of the week what time Tesla's share price is to be at, so you can see your profits. So let's say 2 p.m. on Monday the 6th, and Tesla's trading around 743. We'll get about $21, and you can just see how the certain times change depending on the further closer to the expiration date you go. So you want to get closer to the expiration date as you can. Obviously, as you see, it gets more green and the profits increase. So yeah, I always recommend coming into option strat to set up your option strategy and to visualize it just a little bit better, because like I said, obviously Robinhood doesn't show you all that much. So option strat shows you way more in terms of what you can see visually compared to the times and the days of the week. If you enjoy other option strategies, be sure to check out the video on your screen right now and subscribe for more videos like this one. And if you have any questions, be sure to comment those down below. And yeah, thank you for watching.